Good morning, everybody. Welcome back to Crypto Warehouse. I hope you are all doing incredibly well. I'm just making sure that we have the audio playing, which we do not for some reason. I hope you're doing all incredibly well. It is Friday. It is March the 6th, and we have a big weekend ahead of us. Not only are we streaming today, but we will be joined by the one and only Yikes tomorrow at 2 p.m. Actually, no, it's 11 a.m. Central European time. We'll be joined by Yikes, and the Oracle himself and me will be discussing all things crypto related. Now, there appears to have been an issue with notifications. And that's very simply put, nobody is watching. So if you are watching on Catch Up, I hope you're having a great day. Now, what we're going to go through today is we're going to go through where Bitcoin is at, where it's likely to go. The title of the show is $70,000 soon. I did that when we were way above $72,000. We have come down. We're now sitting just above $70,000 today. Are we going to break down? I think so. But we might have a retest and go to the upside. You'll just have to wait and see. Now, the rest of the show will consist of the following. We're going to be talking about the Ethereum ETF. Eric Trump has had a bit of a rant about traditional banking. We're going to talk about David Schwartz, the ex-CTO of XRP. We're going to be talking about Link partnering with Visa. We're going to be talking about Western Union and Sol. And then we're going to be talking about being able to spend ADA in spas. Okay? Now, not the kind of spas you go to relax, the kind of spas where you buy loaves of bread. That is what we're going to be talking about today, as well as looking at some X-Files. So I hope you all enjoy the stream. Now then, let's switch over very quickly before we get any of that and have a little look at the Bitcoin price. Bitcoin is coming in below $71,000. Okay? There was a few kind of moments where we were looking like we were going to break above 74,000. We haven't. We're back below 71.2 right now. We have wicked down a little bit further than this. I think we might have bounced off 70,000 this morning, coming in at 70,580, but we are up almost 5% for the week. Ethereum still below $2,100. XRP, I think XRP is now a stable coin. It's now at 140. It's been at 140 now for, I don't know, probably a couple of weeks. It came back down, got to about 130, 135. It's now at 140. Solana is below $90. That's only up a touch over the weekend. Cardano doesn't seem to have moved. In fact, it's dropped a lot over the last week. Hype is hanging around at $30. And Chainlink has finally broken $9. So there's your top coins. Your gainers, some of them we can talk about, others we can't. Kite is up a lot. So is River. Pi is up. Quant, a few other tokens are up. And I think there's a fair few mediocre losers. Jupiter's had a bit of a run. Okay, it's up 16% on the week. So a little bit of a retracement is absolutely fine. I think it wicked off about 19, 20 cents this morning, and it has retraced. Trump, Zcash, Decred, stable. A few losers, but nothing really to worry about. Remember, if you are watching, say hello in chat. Chat is dead. There is no chat. Okay, so I am sitting here talking to myself this morning, which I do most mornings anyway, so that is absolutely fine. Let's get on with some X-Files. The Market Watch I bring up on a Monday, but today is going to bring some volatility. And the reason for that is this. On Friday, today, March the 6th, we have the US unemployment rate and the employment report. We also have, as far as I'm aware, a few of the Fed speakers talking. We've got the San Francisco Fed and the Cleveland Fed both talking. It's possibly going to be a volatile day. Okay? We don't know for certain, but it looks like it's going to be a volatile day. And next week is no different either. Next Wednesday, we have the CPI data on Wednesday, and Thursday, we have jobless claims. So next week and today, very volatile. If you're anyone that likes to leverage, please try and avoid leveraging for the rest of the day. Okay? Let's not cut any bones here. This is the kind of thing you want to avoid. Now then, the one thing that I was going to mention to you is this. Good morning, Danny. I hope you are well. Is this. Tomorrow at 11 o'clock Central European Time, which is 10 o'clock UK and 10 o'clock UTC, I think, is Market Vision. Myself, the Oracle, and Yikes will be talking about all things crypto, the current state of the market, some altcoin picks, projects we've got an eye on, maybe a little bit of AI thrown in there, and then, of course, the global macro and what's going on there. So that is tomorrow. Bookmark this in your charts, and then you know where we are. Now, let's get on with... I've got a Piers Morgan link. Why have I got a Piers Morgan link? Let's have a quick look. Yes. I am somewhat of a cricket fan. And I thought we were going to do quite well in the ICC. Unfortunately, we came up against a very good Indian team and we lost by 7 runs. So congratulations to India. They are in the final. We are out, but we can't win them all the time, can we? So great batting display. At one point, it looked like India were going to absolutely roll us over, but we showed a little bit of fighting spirit to make it a respectable scoreline. Losing by 7 runs in a one-day match is really not that far away. Now then, we're keeping an eye on this because there are only 1,002,000 Bitcoin left to mine. Given that we mine Bitcoin at 450 per day, we are probably going to see Friday, by next Wednesday, we will have less than 1 million Bitcoin left to mine. Now, that might not mean anything to you, but psychologically, it's a big change. We were covering Bitcoin when there was 2 million left to mine, not that long ago. We're now down to 1 million. 1,002,000. And this was, of course, probably of last night. We're actually at 1,771 left to mine. So we've really only got 4 or 5 days left. And that is it. That is it. Less than 1 million Bitcoin will ever be produced again. Incredible. Now, moving on. Again, let's just keeping an eye on everything. Right. We're going to be talking about ADA at the very end of the show, but we had to put this one in. The biggest issue with Cardano is not the fact that it takes forever to build anything. It's not the fact that they don't have DeFi platforms. It's not the fact they don't have meme coins. For me, the one reason that ADA has never really taken off is the fact that it hasn't had stable coins. No stable coins, no liquidity. When you sell your ADA, where do you sell it to? You can't. You have to send it to an exchange. You have to bridge it, whatever it might be. They have added their own USD token. And this is what happens when you add liquidity to a market. Now, it might not seem like an awful lot, $180 million, but it's $180 million more than they had 3 weeks ago. I would expect this to probably surge dramatically over the next 3 or 4 months. I certainly expect them to get up towards $1 billion worth of liquidity on the Cardano blockchain. And just as a reference point, probably about 3 or 4 years ago, Solana was in the same situation. Solana didn't really have a lot with regards to USDC. Everybody was trading against a Sol pair, and Solana really took off when the stable coins took off. So I do expect over the coming months the stablecoin supply on Cardano to absolutely rip. Now, when that happens, there's a very good opportunity probably for DeFi farming on Cardano, which hasn't really been there because we've not had the liquidity. And I think this is massively bullish for Cardano and ADA long term, because at the minute, all you can do with ADA is really stake it. It doesn't really have much in the way of utility. There are some meme coins, yes, there's some NFT projects, but there's no way to stake and DeFi farm and loop and all those kind of multiply, all those wonderful things you can do on Solana, you can't really do on Cardano. So this is actually something to keep an eye on. And before you know it, probably by By April, May, this is going to be upwards of $500 million. Then we've got the $1 billion milestone to come. And then I think we're going to see ADA really, really do well. I'm not saying it's going to do better than Solana or any of the bigger ones, but I think it's going to do incredibly well. Now, this was last night, $750 million worth of USDC was minted on Solana. Sometimes the money comes in and waits. There's a very good chance this money is going to sit on the sidelines and wait for Solana to maybe break back down towards $80. Who knows? But I don't think we're out of the woods yet as far as the bear market is concerned, but I also don't think we've finished with our move. Now, obviously, if Bitcoin goes up towards $80,000, Solana is certainly going to probably break above $100. Maybe the cash is sitting on the side there to take advantage of that. But those are the kind of things you normally see on Ethereum. You normally see $1 billion worth of USDT being minted. So to see 750 million on Solana is pretty impressive. Right, let's move on. Oh yeah, this was just the point that we're going to be having Yikes on the show. That was it, really. We don't really need to cover much more about that. Now then, let's move on. We are going to look at the Bitcoin chart this morning. For those of you that are here, we're going to look at the Bitcoin chart and we are going to see where we think it's going to go. I did put a video out yesterday about an update as to the stage of the cycle that we're at. We've covered the majority of the stages pretty much accurately since January. The one thing I suppose we got wrong is the prediction of how far we were going to come down. We had 74 to 80,000. We came down to 60 to 63,000. That's the thing we got wrong. But we didn't get the move wrong. We got how deep the move went wrong. We've now been talking about having a relief rally for about the last 3 weeks. We're now seeing the relief rally. The question is, does the relief rally finish at 74, 80 or 85,000? But I'll show you the chart to talk about that in a minute. And then we will get on. I'm just, like I said, keeping an eye on chat. Right, Bitcoin miners embrace artificial intelligence for enhanced efficiency. Now again, Bitcoin miners are always in the news. We're always talking about the fact that America First is now building another 6,500 miners. We've seen other miners capitulate and sell because they're switching to AI. So mining is pretty much big news at the minute, and you tend to get that when you're in a bear market. Another sign of a bear market is miners capitulating. They normally finish capitulating within a year of the end of the bull run. So we finished on October. The Bitcoin miners will probably finish selling their surplus supply of Bitcoin by August, September this year. That tends to be the flow. Although we might be breaking out of that, I still think that holds true. Now, Bitcoin mining firms, however, are going to start to use AI to optimize the mining of Bitcoin. And again, it's a race. It's a race of optimization. It's a race of having hash power. It's a race to have more miners than your competitors. And it's a race to get your hands on that Bitcoin. It's all about min-maxing, as I think the kids would say, your Bitcoin mining operations. So what the mining sector has started to do is use AI to help them with their mining strategies. The core challenge for miners is maintaining profitability. This is pushing them to explore innovative solutions to enhance efficiency and reduce costs, a crucial response to the pressures currently faced by the industry. Again, everything that they can eke out, they can. But remember, it doesn't matter how much AI helps, there's still only 450 Bitcoin a day. That doesn't matter how optimized they are. It doesn't matter how well they perform. There's only 450 a day. So what they're doing really is it's a game of hungry hippos. They're trying to improve to give themselves that 1% on the competition. What really makes them profitable is, of course, the price of Bitcoin. If Bitcoin was at $200,000, it'd be a lot more profitable for them. Obviously, we're not. We're sitting at $70,000. But again, there's only one pie, and that pie is 450. Okay? Don't forget as well, in the not too distant future, we're going to have the next halving, and it's going to go to 225. So the miners are up against each other. This is a kind of a competition against each other. It's not really a competition against you. They are trying to basically help. But this is a good example of how I think AI can help, because of course, if you improve efficiency, maybe you can improve your workflow, maybe you can improve your electricity, maybe you can work on many other things. But I think this is a good thing overall, that we're starting to use AI in some industries which are pretty heavy lifting, and Bitcoin mining is certainly a heavy lifting industry. Now then, the Bitcoin chart. The video that I made yesterday, which I put out, was talking about the cycle, the midterm cycle, and where I think we're going to go next. And very briefly, let me explain where we are. This was 2022. We're not going to go back over the other ones I've done. If you want to know what I'm talking about, watch the video. I'm not going to explain it all now. But this is kind of the move we can probably see from Bitcoin over the next few months. Now, the moves we have been called as follows. We break down below the bull market support band. Check. We rally into the bull market support band. Check. We dump and we put in a low, and this low in 2022 was at the end of January. Our low, I think, was the 2nd or 3rd of February. We've done that move as well. Now, what comes next is the next part of this move, which is this rally where we went from 32,000 to 48,000. Now, that's a 50% move. Not saying we're going to do a 50% move from here, but if we did, we'd go from 60 to 90,000, and I think that's a little bit steep from where we are now. But what happened then, when we carry out this move, is we top out again. Maybe we put in a lower high, and then we have the rest of the bear market, where we come even lower. So 2018 is similar. If we want to go back to 2018, 2014 is a little bit further into the past, so it's not quite the same. But we have a cycle. We have a yearly cycle, then we have the 4-year cycle. And the next part of what we've just been talking about is to show you what happened in 2025 and 2026. We put in the all-time high. We break below the bull market support band. We rally into the bull market support band. Then we put in our low, which was, I think, about the 5th or 6th of February. So within a week of when we put in the low back in 2022. Coincidence? I think not. Then we rally. Now, like I said, in the previous cycle, we went from 32 to 48. That's a 50% move. We are at 60,000 here. If we did that, we would go to 90. But like I said, if we're going to look for a rhyme rather than a copy, we would look to the bottom of the bull market support band, which is sitting at this moment in time at $87,000. So if we copy, okay, history doesn't repeat, it rhymes, yes, but if we did copy, then that $87,000 would be our next move. Where I think we're going to go to is one of these two targets down here. The first one we've gone to pretty much perfectly, and that's 74,000. The next one up is 80,000. This is a psychological level, nothing more. Okay, 80,000 is a psychological level, the same way that 70,000 is a psychological level now. And by the way, the point of the video title today is 70,000. Breaking is that we could break below 70,000 over the course of the weekend. If the news comes out today, the data comes out today in America, that could push us to the downside. Alternatively, it could rip us to the upside. We don't know what that data is going to be, but we're sitting above 70,000. So that is a good indication that maybe we've got some continuation. If we do continue, 80, 87,000, they're the two lines that we've got left. Now, after that, and this is where a lot of people will disagree, is if we do this full move. So let's say we go up to around this area here, because I think the Oracle's got about 85,000. Let's say we do this, then we are likely to sweep lower before we get towards the end of this depression, which is, I think, going to be coinciding with the midterms. That would sweep a low. Now, you have various different people. So you have Ben Cowan is talking about 40,000. You have other people talking about 37,000. I think I am talking about probably this area here, which is about 50,000. I think the Oracle has got about 55,000. So we've got a kind of box of where we're going to come to down here. Okay, no one's going to be absolutely accurate on this. Maybe one person's accurate. Maybe the Oracle's accurate. Maybe Ben Cowan is accurate. But we have a box down here where we are likely to come to. And then, and this is the important thing, we are probably going to bottom around this period here, which is kind of October time, I think. Then the midterm is, I think, the 6th of November. That gives us 2 whole months for us to start to watching the days go by. Okay, we are back. Sorry about that. I've changed everything that there is to change, and we still get dropped connections. Now, we do have some questions in chat about this. Good morning, Janet. No risk. What's that? No risk, no rewards. What do I think about Picoin listing on Binance? I do not like Pi. I do not like it. I am not a fan of the token. I think it's a trash coin. I just don't like it. Now, maybe over time it can learn to change my mind. We'll go back to the Bitcoin chart in a minute, but I think it's important to explain why I don't like it. There are projects that can begin as scam or scammy projects where they build up enough momentum that over time they become a success. Bonk is a perfect example of that. So is Pepe, really, I suppose. They both started as meme projects with absolutely no business plan, no roadmap, nothing. And then what happened was they took off. And when they took off, they had sensible heads in that team that built what Bonk is today and Pepe is today and a few others. I do not like Pi at this moment in time. I don't like how it started. I don't like anything about the project. But in time, if they build and they build and they build and they build an ecosystem and that ecosystem is popular, then it will take off. But I do not believe for 1 minute that Binance should be listing the likes of Pi, in my humble opinion. Now, we're going to go back very quickly. Now that we're working again, we're going to go back to this chart. Now, what I said just before we got cut off was my definition of a bear market is to come back down to the previous all-time high, which is here and here. That's my definition of a bear market. You can go back to 2021, compare it to 2017, or 2022, sorry, and compare it to 2017. You will find that we retraced to the previous all-time high. Now, that's not to the precise number, but it's the range of the previous all-time high. We've done that. Therefore, the definition of a bear market, in my book, has been ticked. Now, there are many other things to talk about. The fact that the bear market will last 12 months from the top. So, if we topped up here on, was it October? Did we top on October the 10th? October the 10th, October the 8th, okay, is the all-time high. The bear market will end roughly October the 8th, 2026. So top, 12 months of a bear market, end October the 8th, roughly. So this move, which brought us down here, could continue, and then we break out here. Maybe we put in more of a higher high, higher low as an indication. That's the rough rule of thumb. It doesn't have to play out like that. But the point of the matter is how people can tell you that we're still in a bull run when we've retraced all the way back to the previous all-time high is what I don't understand. Now, there were many opportunities for us to have continuation, okay? We whipped below and we came back up. We could have held it as support and gone higher. We didn't. We came down. We had a brief moment there where we could have broken through, and we didn't. We dumped. This dump is the same dump that happened 4 years ago. And then the only direction for this now is in this direction, because this is the bear market blues. That's where we are. So it's not all doom and gloom, because this is a really good price, even at 70,000. 70,000, 60,000, 50,000 is a really good price to get into Bitcoin. If we do go to 50,000 and you buy in the $50,000 to $60,000 range, and we go in to put a new all-time high in the next cycle of maybe, I don't know, 180, then you've 3x'd your money. That's the way I would look at it. And there aren't many more safer bets than that, in my opinion. So this is really an accumulation zone. Even though we're in a bear market, this is where you should be buying Bitcoin. We can go lower from here. Of course we can. We can go a lot lower. But the majority of the move has been done. The 126 to 63,000 is a $63,000 move. If we go from 60,000 to 50,000, for example, that's a $10,000 move. So the majority of the move has already happened, and it was sharp and it was violent, and it dumped us to the downside. Good morning, Joel. I hope you are well. Right. There we go. So that's what I'm thinking for Bitcoin. We did get an interrupt with the cutoff, but I think that's pretty much where I stand. I haven't changed my opinion all year, and we're now into March. So we've had two and a bit months of me having the same opinion. Probably the longest time I've had an opinion like that since back in August, September, I would say. Right, very quickly, let me just go and keep an eye on chat. See if that answered the questions. Good morning to Emmanuel. I hope you're doing well. We've had some kind of horrificness going on with our stream today, when no notifications have been sent out to anybody. So we are on very light numbers today. I think we are on a few hundred people on Binance, and we are on about 3 people on YouTube, and that is pretty much it. So it is not a good day. Not a good day. Ethereum ETFs drawing $169 million, highest level in 2 months. Ethereum ETFs saw inflows of $169 million on Wednesday as geopolitical tensions and price reset institutions' crypto appetite. There was an outflow last night, which has taken probably half of the 169 million. I think there was 100, maybe 80 or 90 million flowing out last night. What I would say is, Eric Balchunas was talking about this a few days ago as well, with regards to ETFs. The ETFs are diamond hands. And what I mean by that is there's more going into them than leaving over a fairly reasonable period of time. If you go and have a look over a month or over 3 months or 6 months, the ETFs are consuming more Bitcoin and Ethereum and Solana and XRP than they are selling. So they are a net positive to the price of your tokens. That is all you need to understand. Now, there is a pattern to this, which we've covered before. In every 11-day period, the Bitcoin ETF will buy on 7 days, and it will sell on 4 days. And that is roughly the ratio to bear in mind. If you have 6 or 7 days of inflows, you will have 3 or 4 days of outflows. That is just the rule of thumb. So the way I would argue that is 2/3 to 3/4 of the time they're buying, 1/3 to 1/4 of the time they're selling. That's it. That's it. That's all you need to know. And that has been going on pretty much ever since they came into existence. Through a bear market, through a bull market, They have been buying and buying and buying. And the issue is, every single time they sell in their cycle, crypto Twitter will set itself on fire and say, the ETFs are selling, we're all going to zero. Then, when they start to buy, Bitcoin's going to $200,000, the ETFs are buying. And it's like listening to somebody telling you that the sky is falling every single week. And they're idiots. And that's not how you look at these things. You look at them over a prolonged period of time. You look at them over weeks, months. You don't look at them over days. Eventually, we'll be able to look at them over years, but we're not quite there yet. We've got a long way to go. So the good thing to bear in mind about these ETFs, and the one reason I don't think we're going as low as people are saying, is the ETFs. So whereas without the ETFs, we could certainly see Bitcoin going to $40,000. I just think if we have this supply, we don't see those lows. And I think a 50% correction takes us down to 63,000. And then I think, is it a 60% correction takes us down to 50,000, I think. And that's where I think we bottom out. And people are talking about 40,000 because that's only a 70% correction, and Bitcoin will have put in, diminishing losses in the bear market and all these kind of things. And I kind of agree. I just don't think we go that far down. And maybe we do hit the $40,000 to $50,000 range. Remember, everybody, Bitcoin will always go lower than you think, and it will never go as high as you think. And I understand that. But I just think the ETFs, with their constant buying, is a net positive for the market. And therefore, again, we didn't have them 4 years ago. That's something to bear in mind. We're comparing the same tokens, but slightly different markets. We now have a brand new net positive, which is the ETFs. And I think it's just going to keep the prices higher. Not much higher, admittedly, but higher. So, again, maybe, I'm not really an optimist when I'm sitting here talking about a $50,000 Bitcoin. Maybe I'm just not as pessimistic as everybody else. Maybe I'm trying to find a level of realism in the price of Bitcoin and the price of Ethereum. Maybe. One of the things that we are planning to do, by the way, full disclosure, I spoke to the Oracle about this. In fact, I shouldn't be telling you now because there's literally nobody watching. So no one's going to hear this, but I'll tell the people that are here. If Ethereum goes to about $2,400, so let's say Bitcoin does rally up towards 80,000. If Ethereum gets towards $2,400, we are likely to sell a bag of Ethereum at that price. We are also looking to sell some Solana at $110 if we get there. And the reason is, very simply put, we are expecting the bear market after this. Now, maybe 74 was the top, and maybe we do come straight back down again. But if we do continue this rally to the upside and we do push 80, 85, we are going to be taking some money off the table to buy back lower. Now, I said this about Ethereum a month or so ago when we were at $3,000, and I didn't press the sell button, and we sank below 2,000, and that was on me. We'd done the research. We knew we were going to come down. I just didn't press the button. It's just human nature. But we're not going to make the same mistake again. We're also probably going to sell some syrup tokens, which we hold. We're likely to sell some syrup and then buy back in at a lower price. If we get towards 35 cents on syrup, we will sell. Then we will wait. If the market does come back down, we will buy back in at 20 cents, around that price. So we're not selling to exit the position and exit Ethereum. We're selling to basically be able to buy a bigger bag later on. Now, we're not selling all of our syrup. We're not selling all of our Ethereum or all of our Solana. We're selling enough that we can then buy back lower. That's the entire point of this. And it's not something we normally do, but I think this is a good exercise for us, and also shows you the conviction in what we're doing, really, at the end of the day. Now then, let me check where we are up to. Eric Trump accuses banks of blocking stablecoins to guard their own profit margins. This is to do with the stablecoin argument between the banks and the stablecoin issuers, and obviously the likes of Binance and the exchanges that want to pay a yield on those stablecoins as well. And Eric Trump has turned around and said, what are you doing? You need to sort this out. Trump has given them, I believe, I think that has the time scale or the deadline has passed, I think, or it's very, very close for them to come to a decision before he will weigh in on the matter. He's accused the banks of lobbying to block stablecoin yield programs in order to protect a deposit spread that generates record profits while paying customers also nothing. The big issue here is everybody earns 4% roughly on their stablecoins, whether that be a bank, whether that be Circle, whether that be Tether. So if you have $10 billion worth of stablecoins, that's making you $400 million a year. And what the stablecoin programs are about is paying you some of that yield, 3.5%. I think we are back. That was a quick one. We are. Perfect. Okay. Give me 1 second. I just want to keep an eye on where we're up to now. Give me 1 second, and then I will be with you. One sec, and then I'm back. Okay, back in the room. So stablecoin issuers want to pay out. The banks don't want you to pay out. That's the end of it. That's the story in a nutshell. And Eric Trump has a vested interest in this, of course, because of USD1, which is the World Liberty Financial stablecoin. They want to be able to leverage that. But also there's something a little bit deeper with the Trump family. When the Trump family were not in power, they were debanked by various different banks, which I don't agree with. I think having a bank account is a human right, very simply put. If we're going to be talking about human rights for stupid things like mobile phones, then fine. But I think having a bank account, having access to the internet, clean running water, electricity, fine. I think they're all human rights. They were debanked after Trump lost the election in whatever year that was that he lost. What did he win? He won in 2016 election. Was it the 20? No, let's work this out. 2024. No, the 2020 election he lost, didn't he? Because he won in 24. Yeah, so he lost the 2020 election. They then got debanked. They got debanked. And that was politically motivated. And listen, I don't care which side of the fence you sit on. You shouldn't debank anyone on the left or anyone on the right for being on the left or the right. I think it's a made-up law to allow banks to kick people off. And it happens in the UK all the time. And it's wrong. It shouldn't be allowed. If you are creditworthy and you have money, you should have a bank account. And nobody should stop you from having a bank account, because it's kind of the way, or kind of the reason that crypto exists is because so many people were debanked. So many people have never had access to bank accounts, and it's just a sad and sorry state of affairs. Anyway, we're going to move on very quickly because I'm probably going to finish the stream fairly soon, if I'm honest. There's literally nobody here. I am genuinely talking to myself today. So Packer, this one's for you. Another article that has... Can this day get any better? Can this day get any better? Let's have a little look. Chainlink powered a cross-border settlement between Visa, ANZ and Fidelity. Again, people talk about real-world examples of how crypto can benefit the banking industry or the financial services. Chainlink is always part of these experiments. Cross-border payments between different types of provider, whether it be banks, whether it be financial institutions, whether it be credit card holders, Chainlink is the mesh that makes everything work. If you want a solid project that will make you money, you want to be looking at Chainlink. Absolutely, without a shadow of a doubt. Now, finally, or not finally, sorry, we've got 2 more articles to go. And then, we are absolutely cooked today. This has been an absolute disaster. And I'm not quite sure what has gone so horribly wrong with the stream today, but it's just not working properly. Western Union launches USDPT stablecoin on Solana network. We kind of covered this last year. It's now gone live. They've got their own stablecoin. I don't understand how Western Union are going to make money. That's the long and short of it. Now, the issue I've got is Western Union are a blight on society. And the reason they're a blight on society is because the majority of people who use Western Union are people that are not in the banking system. So they tend to be the most vulnerable. And my issue is, if I wanted to send, I don't know, $100 to Danny, and I wanted to do it through Western Union, there's probably going to be 30 or 40% fees along the way. Excuse me. There's going to be fees for me to send it to Danny. There's going to be fees for Danny to receive it. And it's a mess. And Western Union in the UK was mainly used, if I remember correctly, by Nigerians, or they were the top user of Western Union last time I read about this. And they were sending something like $1 billion a year or £1 billion a year back to Nigeria from the UK. You work out 30% of that, and Western Union were making a fortune. So it's not a case of they're doing this for the benefit of mankind. I believe they're a company that shouldn't exist. I believe they're a company that should be put out of business. Very simply put. If Danny's got a Solana wallet and I've got a Solana wallet, I can send that $100 to Danny and it won't even cost me a cent. So why should I use Western Union? And the legacy of Western Union, for me, is abusing its position with fees. And I'm never going to change my opinion on Western Union. I don't care what they do. They could become saints and angels and nuns. I don't like them as a business. I don't like their model. I think they are one step away from being a shark. So that's my very simple opinion on Western Union. And finally, let us move on a little bit. Cardano can now be used to pay at 137 Spar stores across Switzerland. Now, there's a few ways you can read this. You can read it and smile, or you can read it and be fairly bullish on Cardano. Now, I'm kind of on the fence with this. I'm really bullish on Cardano, and I always have been. I think it just works, and I think Charles is a great head focal point. I think there's a lot of bonuses to be associated with Cardano, and this is a little bit left field, clearly a little bit left field, and I don't quite know why it's Spar in Switzerland either. But you know, the first step is always the hardest. So Cardano users can start to pay for their groceries across Switzerland after the latest open crypto payment integration from Swiss fintech firm DFX Swifts, the Cardano Foundation said on Thursday. The system is designed to process transactions in real time, allow payments directly from ADA wallets without routing through a centralized exchange. For merchants, it reduces the transaction costs by about 2/3 compared to cards. Frederick Griegard, the CEO of the Swiss-based Cardano Foundation, called the development the beginning of a fundamental shift in how value moves through society, which marks the blockchain's industry's transition from an experimental phase to a genuine financial transformation. Now, the way I would read this is very simple. If this is a proof of work, and it works, there's no reason this can't be rolled out across the world. But my argument will be, to anybody, is that why can't every POS, they're called, why can't every POS accept every cryptocurrency within reason? So Bitcoin, Ethereum, Solana, Cardano, whatever, XRP, why can't all of them be used in any way, shape or form? And I imagine we're going to get to that point. Having Cardano as being available in 137 stores is not about generating a massive amount of fees or transactions. It's about proof of work. Now, if Cardano can tie up all of the different SPA stores across the world, different matter. But why would SPA do that when people might want to pay in Bitcoin or Ethereum? So much as it's absolutely fantastic for Cardano, which it is, I don't think it's a differentiator for Cardano. I don't think it's going to set them apart from the universe and make them the best crypto exchange in the world. But what it does is it shows real world use, as we said a minute ago with Chainlink. It shows real world use, and again, I'm bullish on Cardano, and nothing they do changes my opinion of them, because I think long term they're going to be a success. I think short term, as always, they're slow, but they've got stable coins coming. They have the Bitcoin connectivity coming. They have real world examples coming, and they're out there and they don't go away. The community is strong as well, and I'm a big fan of Cardano. Anyway, I think this is going to be the end of the stream because, like I said, literally nobody is watching. I am talking to myself. So thank you all for coming. I'm going to go and find out what went wrong with the stream, why it all suddenly is not working properly. And I will be back tomorrow with the Oracle and with Yikes. We're going to do a live stream tomorrow. It's called Market Vision. It's where we talk about all things crypto, whether it be macro, memes, whether it be about layer ones, AI, all of that comes into the conversation tomorrow. So thank you everybody for watching. Apologies that the show is so short, but there's nobody here. So take care and we'll see you soon. Bye-bye.